Hey guys! Welcome to Great Thinkers TV channel. As it is said that, the average millionaire has around 7 streams of income. The average person typically only has one, usually from their job, which can put them in a balloon low position financially. If you take a look at the average millionaire, it is true that they have more than one stream of income generating cash flow now. Not all types of income are the same. Some are active, some are passive, some are mix of both, some are highly taxed, and some can be leveraged to not have any taxes at all. So, today, we are going over the 7 different types of income that the average millionaire has in their portfolio. If you like videos about business, money and psychology, make sure subscribe and hit the bell button to not miss any of our value-packed videos, and let's get started. The first, and most common source of income, is earned income. This is what you get from a job. This includes the average worker, all the way to the CEO. Many CEOs are still employees of a company. Other professionals, like doctors or nurses, are also included. In this category, earned income is when you exchange time for money, which is what is called active income. This can also include freelancers. Earned income is typically the starting point for many self-made millionaires. This is where the average person starts with, and it's a good way to get started, especially if your job allows you to provide for yourself and your family. But the dangerous part is staying in this category, because this type of income leverages your time, which you have a limited amount. You only have 24 hours in a day like everyone else. So, there is always a ceiling on how much money can be made in this category. This is also one of the highest taxed forms of income. Taxes in this category can go all the way up to 40% of your income. Meaning, some people in this category pay almost half of their earnings in taxes, depending on their income. This is great as a starting point, but we must know what other types of income are out there. The second stream of income is profit income. This is income produced by selling products or services for more than it costs to make or buy them. This is when we move from employee to entrepreneur. In the past, starting a business required a significant investment to buy or make the products, but it has become much easier in recent years with the help of the internet, whether you sell a physical product or a digital product. If you sell a product for a higher price than it takes for you to make or buy them, you are making profit income. Now, this can be both active incomes or passive income, depending on your business model. If you make things yourself and sell them, then it's more of an active income and a little more difficult to scale. But if he creates that the sign of the product, and you have a manufacturer created for you, or you make a digital product, it has the potential to become a passive form of income. There are 2 types of profit income: individual or small scale in business, or highly scalable. The individual or small scale, as when you either create the product by yourself or flip products manually, like on eBay or Facebook Marketplace, and that is a great way to add an additional source to your income. The scalable profit income comes from establishing a business and having a manufacturer, for example, produce your products instead of doing it yourself. This way, you can free your time to focus on other aspects of your company, like sales or marketing. Another recent example of highly scalable business is by using digital products. Since they do not require your storage, shipping, or even ongoing manufacturing, digital products are extremely scalable. Now, these 2 types of profit income are taxed differently. If you are an individual flipping or creating your own physical products in a small scale, chances are you will be taxed the same as earned income. But if you build a business, you might be able to take advantage of many tax breaks, by forming a company, or a corporation. The third income category is interest income. You make interest income by collecting interest on money lent. Now, I don't really mean lending money to your friends. This is typically not a good idea, but there are a few ways to create this form of income, from lending money to the bank, in a form of a bank CD, lending money to companies, in form of a bond, or lending money to the government, and form of treasury bills. These are typically safer ways to invest your money, but are not the most lucrative. Many of these have between 1 to 4% return rates per year. Now, there might be a few other ways to do it with a little more creativity and higher returns, but a lot more risk. This is a passive form of income, because, in most cases, your active involvement isn't needed. Number 4 is for dividend income. Dividend income is when you invest in stocks that pay part of their profits to their shareholders. When you buy a stock in a company that you become a shareholder, whenever the company that you invested in reports profits, they will send a check to their shareholders. Typically, every quarter as a shareholder, you are part owner of the company. So, in companies that distribute dividends, you get a portion of the company's profit. Now, depending on what type of dividend you have, you can pay a lower tax rate with qualified dividends if you make a less than $38,600. In ordinary income, you pay 0% taxes on your dividend income, and it tops off at 20%. If you make over $425,000, which is much lower than earned income, which can go up to a 40% tax rate. Number 5 will be rental income. Typically, comes from buying real estate and renting it out to other people. Now, it does not necessarily have to be home rentals. This can also include commercial properties, which are real estates that can be rented to businesses, or industrial real estate, which is rented to manufacturers. Now, rental income does not have to come from real estate. Specifically, there are other ways to create rental income at a smaller scale. For example, many people rent equipment for various industries, or their cars, or instruments, and etc. Rental income is any income produced by lending a property to somebody else in exchange for money. Number 6 is residual and royalty income. This type of income is when you continue to get paid after your work is done, whether you work in a movie that continues to be watched, wrote a book that continues to sell, or more. Recently, if you built a YouTube channel that continues to be viewed, royalty income is a form of residual income. Royalty income is money you make by letting other people use your ideas or properties to make a money, such as music or books. Music artists, for example, allow streaming services and recording labels to produce and sell their property to the public. Therefore, making royalties every time a song is played or sold, or when someone buys a record, is a similar thing. When a publishing company prints and distributes a book, as long as people keep buying the book, the author continues making money. Now, there can be multiple royalties that collected from the same property. A great example of this is the author J.K. Rowling. She did not only make royalties from her book sales, but also from the adaptation of her books in movies and merchandise based on her characters. Even though it's been 20 years since the first Harry Potter book came out, J.K. Rowling, the author, still collects royalties as long as people are buying merchandise, renting, or streaming the movies, or buying the books. She gets royalty payments because those products are based on her original property. Number 7 is capital gains. Capital gains income is when an asset that appreciated in value is sold. The most common ones are real estate and stocks, but there are many other assets. For example, if you bought a real estate property for $180,000, and you sold it for $250,000, you made $70,000 in capital gains income. Same goes, if you bought 100 shares of a company at $20 a share, and you sold them at $120, you made $10,000 in capital gains. Now, this is different than profit income, because you are not buying or making a product and selling it for a profit here. You have assets that appreciated in market value. You don't have much control over the value increase, but the great thing about capital gains is that taxes paid on this type of income are much lower than most other forms of income. Capital gains tax range between 15 to 20%, depending on the amount earned, and they can go down to 0%, such as in real estate, in many cases. If you use your capital gains you got from a real estate property, and you reinvest them back into the market, you might be able to pay zero taxes at all. You are able to increase your net worth tax-free when building our income. Most of us know only one or two ways of creating income, but knowing the different types of income and how they are made gives us a better opportunity of adding different sources of income into our life. Question: which source of income sounds the best to you, and which one will add? If you enjoy this video, please hit the like button, subscribe for more informative content, and thanks for watching. I'll see you in the next one.